Good evening and welcome to this session of the live learning classes conducted by the Board of Studies of the Institute of Chartered Accountants of India. So we have a lot of people marking in. Darshan ji is here, Diksha, Madhav Tiwari, welcome sir. Darshan again is asking a question, I'll come to that point. Sudhanshu, Bhumika, you have Sushir Kumar Barik, Aisha and Rajini Singh, welcome all of you. Before we see today, we are going to continue with our, we are going to finish the balance portion of acceptance of deposits and we are going to start declaration of dividend. In the last class, Kavita Lamsa was asking about assignments and all that. We will cover it, but we will do it on Sunday. Sunday evening, we have a class. In that class, I will cover that. Okay. Now, Darshan is asking a question. Amount taken by the employer from employee's salary for EPF amount to deposits. See, such questions when you're asking Darshan, before asking, why don't you do a little bit of thinking? See, what is the entry we pass for EPF from this employee's salary? It is similar to TDS now. See, first I will debit salary account debtor to employee. Or salary account debtor to bank, to EPF, to TDS. Now then your question should also be whether the amount I am deducting as TDS is a deposit. It cannot be now because that is to be paid to the government. It has nothing to do with the employee. Deposit is something where you take it as a loan with understanding that you will repay it. Here, you are deducting something from somebody's payment and giving it to somebody else. In this case, the government, both EPF as well as your TDS and all. So in those cases, it will not definitely be considered. It is, see, what is the definition of deposit? Any receipt of money. Where is the receipt of money here? There is no receipt of money. Not only casual, it is not receipt of money. Receipt of money by way of deposit or loan. So here, this amount is in no way a receipt of money by way of deposit or loan. It is a deduction from a payment to be made. You are supposed to pay him 100 rupees. Instead, you pay him 90. That balance 10 rupees, you are paying to the government, PF authorities. So your question is good. I'm not saying your question is good. I'm saying you are unnecessarily wasting your time thinking like this. And you are also not understanding fundamentals. You are not thinking what is PF, how it is paid. No. So merely for asking questions, you are thinking convolutedly. Darshan, you know why I am making this point vehemently? This is where the danger lies. Straightforward topic, there are so many amounts not to be considered as deposit. If you know the highlighted ones and go to the exam, you will get a 60. When you think confusedly like this and start breaking your head, you go, that's all. So choice is yours now. Darshan, slightly change your approaches. You will actually be very successful. Don't mistake me for this. You're already the problem is you're thinking too much. Stop thinking too much. 1. 2, start thinking clearly. If I were you, what I would have done first, I would have mentally thought of the journal entry. Salary account debtor to bank, to PF employee contribution, to TDS. TDS also will come in that entry in case he is liable to tax. So the net amount only will be paid to him. Am I correct? There may be other deductions also, Baba, like for example, loan deduction. So that will be one consolidated journal entry. But basically, it's an expense account. We are not receiving any money from him. We have to pay him. You got it now, but you can get it on your own. Okay? Think about it. Sometimes, once you understand the basic principles, your way of approach itself will be totally different. Got it? It is not enough if you get my answer. Get the point I'm trying to make here. Stop confusing yourself. Boss, you cannot confuse me because I am my foundation is very strong. You cannot confuse me. You are only confusing yourself. Okay. EPS, earnings per share. Madam, you're talking about EPF or EPS? EPS is earnings per share. Yes. I mean, according to, if you have to disclose the EPS now in your balance sheet. in a P&L account, last line. Is that what you're asking? I'm so sorry to hear that Jaspreet ji's mother was. I hope she is better now, and hopefully things will be fine. Don't worry, the lectures are anyway videotaped. You can always take it up. Okay, and good. Moving on. So today we will go back to where we stopped, and then finish it, and then go to declaration of dividend. EPF is a statutory provident fund. It's a kind of a some nonsense they have. From your salary they will cut 10%. Some nonsense percentage, I don't know. But you go and refer. If you want, I will refer and tell you. My team knows it. Exact percentages and all sorts of nonsense there. It will be deducted. See, the employer will deduct from the employee's salary up to the statute limit. Then he will also have to contribute an equal amount. That is the thing. Employer, that will be expense. Straight away, that is an expense. Okay. EPF employer contribution account to bank. Straight away expense. Okay, that is his cost. It's part of his employee cost. And that will be deposited with a guy called PF commissioner who will keep it and invest it and all sorts of nonsense. And finally, you will get something. I don't know anything about it because the only time I ever had a EPF deduction was when I was working in Pricewaterhouse for about 3 years. That money was gone. I never could collect it from the department, from the EPF department, because I was an employee of a Delhi-based firm. Though I worked in Chennai Pricewaterhouse, I was employee of Choksi Bhargava, which was in Delhi. my PF account was in Delhi. So by the time I could go and collect it, it got too late. So I just forgot about it. So since I've never been an employee of any company other than Pricewaterhouse, I am not able to understand what this EPF benefit, because as a practicing chartered accountant, I have my own portfolio, I have my own savings, I have managed somehow to build a good, without the PF commissioner support, I have been able to ensure that my retirement will be good. Many employees, PF is one of the worst things that can ever be done. Because in America, at least, they have different approach. Okay, 301k and all, 401k. It's a fantastic, where you can choose and you can invest. Here, the money goes to the statutory authorities who do whatever they want with it. Anyway, again, this is my view. So we came up to here. Now we move on. Just like you had a debenture redemption reserve account, similarly, you have to create a kind of deposit. Not exactly a deposit repayment reserve. You have to deposit. You remember debenture, you deposited the amount on or before the 30th of April. Similarly, the company shall deposit on or before 30th of April each year, not less than 20% of the deposits maturing during the following financial year. Same logic as debenture, except that it is 15% there, here it is that 20%. On or before 30th April, you should see what are all the deposits maturing during the following financial year. Means, if you are looking at now, by 30th April 23, you should have identified what are all the deposits maturing before 31st March 24. And 20% of those deposits, you should deposit in a scheduled bank. And keep it in a separate bank account to be called Deposit Repayment Reserve Account. It is called Deposit Repayment Reserve Account. Okay, that account. That is why they use the word Deposit Repayment Reserve Account. This is different from Debenture Redemption Reserve, which is a reserve and which is kept in the balance sheet as a reserve. So P&L appropriation account debtor to Debenture Redemption Reserve. And that reserve will be taken to the balance sheet and shown in the reserves and surplus. This is deposit. Meaning, you have to take money out and put it in a bank with a scheduled bank. And that money will be lying with the bank. It will be on the asset side. And whenever you want to repay the deposit, this money should be used for repayment of deposits. It cannot be touched otherwise. So in a way, that money will be locked in that bank account on the asset side. So 20% of the deposits maturing on or before during the following financial year should be deposited in a scheduled bank. Scheduled bank means a bank which is registered by the Reserve Bank of India, licensed by the RBI. Whenever a banking license is given by RBI, that name of that bank will be included in the schedule in the Banking Regulation Act. There are three schedules there. It will be included in the schedule. If it is in that schedule, it is called a scheduled bank. All banks are scheduled banks, except cooperative banks, which are not scheduled bank. Everything else is scheduled bank. Okay. Including your HDFC Bank, Bandhan Bank, Yes Bank, Dubakar Bank. All banks are scheduled banks. Don't worry about it. There is no Dubakar Bank, but for all you know, they might form. Yes Bank itself was a Dubakar Bank only. Okay. Premature repayment of deposits. Means premature means what? Before maturity. Pre means before. Before maturity. Before the due date for payment, if a depositor wants money, can I pay? Yes, you can. In some extraordinary cases. But there is a condition. If a depositor requests for premature repayment of deposit after the expiry of 6 months, but before the actual date. So up to 6 months, you cannot give. 6 months, he cannot ask for payment. But after 6 months, he can ask for premature repayment. The rate of interest payable for be 1% less than the rate which would be payable for the period for which the deposit has actually run. Suppose you have promised him 9.5% or 9% for 3-year deposit. Example, pure example, 9.5% for 3 years. Now, at the end of the first year, he wants it. You can give it. But interest for that 1 year or 1 year and 3 months or whatever, no? That will be 9.5 minus 1. That is 8.5%. Got it? That's the only penalty he will have to incur because we honestly believed you're going to keep it with us for 3 years. Now you want it immediately. Chalo, we'll pay you. But you have to give, we will give you only 1% less than the rate applicable to you. Okay? Now, in 2 cases, reduction of rate of interest is not applicable. One, there is this reduction of rate will not be there. One, when it is the premature repayment for compliance with limitation on quantum of deposits. We saw now 15%, 35% and all. Now, if you're exceeding that, you might want to repay a few people before itself. Now, when you are repaying it, you can't reduce interest. You have to pay them at that rate only up to the date you are giving back. In fact, this is NBFC case. Non-banking, non-finance company. NBFCs have a different rule. If you are, I think rating, based on the rating, they said AAA plus means 3 times, AA means 2 times, A means once. You can, your deposits can be 3 times, 2 times and once. That's all. Earlier under the old RBI regulation, it was 7 times, 10 times and all. They could take. Suddenly they reduced it. And that was 1997, it became a big thing, but now we are got used to it. Okay. Whatever it is, when that happened, they have to prematurely repay because they are, most of them are having 4 times, 5 times and all. So they called the depositors and repaid the amount to them. Whenever you are doing it in compliance with the limitation on quantum of deposits, then you have to pay the full rate of interest. And premature repayment to member of a national defense services in war crisis. So he is a soldier. He is deposited with you. There is a war and he wants his money very fast. Chalo, give it. Interest cannot be reduced. See, this is one stupidity that they have given here, which is very, very silly and idiotic. But anyway, it is there. I am giving it to you. You please. For the purpose of this rule, where the period for which the deposit had run contains any part of year, then if such part is less than 6 months, it shall be excluded. And if such part is 6 months or more, it shall be reckoned as 1 year. I don't know why this is like this. See, there is a fellow, his deposit is maturing some other time. Now he wants it. Now, you are going to repay to him on the, for example, 31st of March. Okay? Prematurely, 31st of March. Now, the period for which the deposit had run, see, it started from, let us say, 1st April, May, 1st January to December. Then, year. Here they say year. Please note, here the word used is year. Year means calendar year. Year means calendar year. Y-E-A-R, surf, year means calendar year. So it started on January, December. Now another 3 months, March, till March it has come. Now the period includes 3 months now, which is less than 6 months. So it will be excluded and he will get only for 12 months. What stupidity. By the same time, by the same class, if it is beyond June, suppose it is in October, then that whole thing will be taken as 1 year. I don't know what these fellows are trying to do. Okay, but this is there and I have given it to you. I'm not comfortable about this last red color thing, but I'm explaining it to you since it is there in the act. I'm telling it to you. The rules I'm telling it to you. Premature renewal of deposit for higher. See, for NBFCs, I have inquired. Very clearly, they'll calculate for the period, exact period. 9 months means 9 months. Whatever, till the from the date of deposit till the date of premature repayment, they will calculate the interest. But NBFC, these rules, they got like this. Okay, where any eligible company permits a depositor to renew his deposit. Renew. Before the period of expiry, before the expiry of the period for which such deposit was accepted by the company for availing of a higher rate. For example, the rates of interest might be revised. So this fellow is currently getting 8.5. Now you are revised it to 9.25 for the same period, 3 years. So he comes to you and says, hey, I will close this deposit and I will take fresh deposit at higher rate of interest. So he wants to renew before the expiry of the period. Now, then the company shall pay interest to such depositor at the higher rate only if such deposit is renewed in accordance with the provisions of these rules and for a period longer than the unexpired period of the deposit. See, he's coming to you, his 3-year deposit. At the end of the second year, he's coming to you and he wants to renew it for 6 months or balance 9 months or whatever at the higher rate. No, you cannot pay. You can pay at the higher rate only if he is extending it for a period longer than the unexpired period. If the unexpired period is 9 months, then he should at least renew it for 1 year. Got it? Or if it is 1 year, then you should renew it for 2 years. Whatever. Because most usually, no company will give you 9 months deposit and all. Maximum they have 6 months, 1 year, 2 years, 3 years, 4, 5. I mean, so 3. It can be more than 36 months now. So 3 years, maximum 3 years. That's all. At the end of 3 years, you will have to renew it. So a public company shall make a disclosure in its financial statements by way of note about the money received from its directors. Wherever it's receiving from directors, because it is exempted now. So they want to know whether they are really giving from their own money or outside and all. So it has to give note of directors. In case of private company, it should disclose its financial statements, note about money received from directors or from relatives of directors. There. As a one-time measure, every company other than government company shall file a one-time return of outstanding receipt of money or loan by a company not considered as deposits from 1st April 2014 till 31st 2019. See, these rules came into effect in 19. So they said, whatever you are claiming as exempted category of deposits, one-time measure, you file it, okay, within 90 days from 31st March 2019. So they want to know for sure that these are all exempted and go on. So they gave that one opportunity, one time. But that is now not relevant because we are now in 2023. Premature repayment of deposits, we saw. We already saw because same provisions are applicable here. In case the depositor desires to avail higher rate, the company shall pay him only if this again, see, this will come in both places. That's why I'm giving it as a common provision. We have already seen it there. A duly audited return of deposits in DPT 3 containing particulars as on 31st March of every year shall be filed with the registrar with the requisite fee on or before 30th June. So before 30th June every year, you have to file a return of deposits in DPT 3. Giving the details of deposits, etc. When the advertisement was issued, what happened, just to be sure. Okay. See the type of compliance also. Ongoing compliance, you have to repay mature deposits. You have to pay interest half yearly or whatever you have agreed to pay. Then these are ongoing compliances. Then on or before 30th April, you have to pay the deposit reserve you have to create. deposit reserve account, 20% you have to deposit. On or before 30th June, you have to file the return. Then again, before the AGM date or within 6 months from the end of the financial year, you have to release the fresh advertisement, statutory advertisement. Are you able to see the cycle? It's a continuous activity, year on year. You have to issue circular or you have to issue the advertisement, get it approved by the board and release it. Then 30th June, there will be a return. On or before 30th April, deposit. Ongoing the register. Whenever there's a new deposit, you have to update the register of deposits, the pay interest, repay whenever they come, premature repayment. So which means when a company has a huge deposit base, they might even have a separate department for handling deposits. Just coming under the finance department, they will have one manager and 3 clerks or 3 executives handling deposits. Their only job is deposits. Okay. In case the deposit company fails to repay deposits, both secured and unsecured, on maturity or after they are claimed, it shall pay a penal rate of interest of 18% per annum. When we come to declaration of dividend, I will tell you that where deposits are not claimed or interest on deposits not claimed, then after 7 years, it has to be deposited in the Investor Protection and Education Protection Fund. It has to be transferred to the IEPF. I will tell you that when you come to declaration of dividend. When we talk about dividend, we'll talk about this also. See, if somebody is depositing it, I am supposed to pay it to him now. I am keeping the money ready, but he is not coming. But today what happens now? You can't say that. Because when he is applying for a deposit, you will ask him to give his NEFT details. NEFT. So that you can make an electronic fund transfer. You can make an electronic fund. So who is preventing you from sending an EFT? But suppose that account is closed or that account is inoperative and that money is bounced back to the company. The bank says this account cannot valid, take it back. Now I have done my best. I have tried to make the payment to him. It has come back to me. I will have to keep it. And after 7 years also it's not claimed. Then I will transfer it to Investor Education and Protection Fund. It's called IEPF. Okay. The company has no right to alter any of the terms and conditions of the deposit trust deed and deposit insurance contract. Whatever is published is mandatory. You have to abide by it. In case there is any contravention of any of these rules for which there is no punishment, then for those cases, there will be punishable with fine up to 5,000 rupees. Continuing offences, further fine up to 500 rupees for every day during which the contravention continues. Where deposits are not repaid and it is proved that there was intent to defraud, means the idea of the company is to accept deposits and run away without repaying. Then every officer of the company who was responsible for the acceptance of such deposit, here they are talking about officer, includes KMP, company secretary, everybody is included, CFO, be careful. Not director only, officer who was responsible for the acceptance shall be liable for action under section 447. You know 447. So again, punishment in case there is a contravention of 73 and 76. That is, any contravention, anything you make, you don't comply, then company minimum 1 crore or twice the amount of deposit, maximum 10 crore. Officer 25 lakhs up to 2 crores and imprisonment up to 7 years. Deposit matters, they are very strict. This imprisonment provision is very much there. It has not been removed from the act. Okay. So they are very, because see, you are taking the hard-earned money of poor people like me. So you cannot cheat me. And if you try that, the punishment is very stiff. But they will do it. Many companies do it and nobody is catching them. They go, see that fellow, he will form a company, accept deposits, run the company, mismanage the company, siphon the money, then run away. Deposit will be standing. What to do? We will invoke the provision. We can complain to the tribunal, MCA. They will also send notice after notice. Fellow will run away. Who will go and catch him? Okay. So it's all in the act. The reality is the fraudulent fellows get away. So the real lesson I am give always, whenever I'm addressing the investors now, I was the secretary of the Investor Education and Tamil Nadu Investor Association. When I used to address the Tamil Nadu Investor Association, always I used to say, don't expect government to protect you. Don't expect Ministry of Corporate Affairs to protect you. Don't expect SEBI to protect you. Don't expect God even to protect you. Use your brain. Invest in companies which are doing well. Do not invest in fraudulent, obviously greedy. Don't be greedy and invest in companies which are offering high interest without verifying their financial statement. Where can I get financial statements on? Boss, the DPT1 is having the financial statement. That is why it's a compulsory form. Statutory advertisement, it has summarized the balance sheet. They won't know that. They won't even see that. Blindly, they will go, Dubakur Limited deposit will give me 10% interest. So better to go there like that. Poor fellows, the retirement fellows will go there and put their money. That fellow will run away with the money, or simply he will siphon it, maintain bad books of account. And then 1 year audit, second year auditor also will refuse to audit. Then nothing will happen. By the time MCA wakes up and does something about it, that fellow would have run off to Singapore, and from Singapore to Brunei, and that's it. You can't catch him. So lastly, this is for repayment of deposits accepted before 2013. Not relevant. I'm just giving it because it is there as a section. This is for deposits before the act came. Okay. For those deposits, you have to file 3 months, within a period of 3 months from the commencement, 1/4/2014, you have to file. And these deposits are to be repaid within 3 years. Okay. So the idea was, if any deposit is pending at that time, the older deposits, maximum you have only 3 years to repay, finish it off. If at all you go to tribunal can extend the time for repayment. And if there is a default in doing this, there will be a penalty. So this is the general provision relating to acceptance of the deposits. I hope we have seen this. I don't see any more questions from any of you. I shall presume that you have understood the topic. If you still have any doubts, don't hesitate to ask me anytime during the session. Now we will start Aaj ka topic, that is declaration and payment of dividend. Right. Before I commence the new topic, let me pause. In case you have any doubts, I will wait. Because after I start the new topic now, if you can still ask me, I have no problem if you ask me. But if you want to ask me any question on acceptance of deposits, kindly do it now. It's a fairly simple concept. Main definition of deposit, then the procedure, deposit reserve. It's all. Okay, again, before I conclude and go, I'm going to again ask you, don't overthink and don't confuse yourself. Aram say you can read, everything is clear, get clarity, take notes, move on. See, the institute exam is not so confusing as you think. It's fairly straight. For a sincere student who knows the fundamentals, who knows the basics, who is thorough, for him the exam is not tough at all. It is only for people who do half-baked one activities, just doing over, not going into the depth of the topic, not having fundamental principle knowledge. Only they will get into trouble in the exam in CA, according to me. Because similarly, the mug up and vomit fellows will be in trouble. The people who read completely everything and then go there, then find that there is a problem that is so simple, it has one small logical thinking needed. So that will also be tested. Application will be tested. So many things will be tested. So mug up and vomit guys, who are getting high mark in +2, high mark in college, they will be in trouble in CA. Pathetic, because when we see them, they will be pathetic. Because they would, sir, I used to get class first in, I got my school first in CBSE, sir. I got 100 on 100 in CBSE accountancy. Like that, now they'll say. Here they will not be able to clear accountancy. Because the expectation here is totally different. It's not mug up and vomit. It's logic. It's understanding the principles, and I'm just giving this to you as an input. Don't mistake me or don't get angry with me for telling these things to you. I know you will not, but still, some students might feel bad. So in fact, once one very rude student in one of my early batches, he put a message in the query pad. Don't waste my time. Continue with the lecture, like that he put. I was thinking, even assuming this fellow completes his CA with such rude behavior, how will he be able to survive in the corporate world? Inshallah. Okay. Thank you for saying no doubt. Moving on. Now we'll move to the fresh new topic called declaration and payment of dividend. Dividend is the reward for the shareholder, right? Listed companies give dividend. Dividend was a nice exempted income for the shareholder for a long time. Till recently, dividend was exempt from tax. Company had to pay dividend distribution tax. Now, the dividend in the hands of the shareholder is taxed as such. So, I don't know how. See, what right have you got to tax dividend? Because you already tax the same amount in the hands of the company as the income. You charge the tax. Now again, you're saying I will tax it in the hands of the individual. One. I don't know whether there is you think about it. Suppose a subsidiary is receiving dividend from holding company. Holding company is getting dividend from subsidiary and distributing it to its shareholders. Triple taxation was. Subsidiary is tax. Holding company will pay tax in its hands. Net of that tax it will distribute. Very, very draconian law. There is no exemption for declaration of it. But I think some exceptions are there where the holding company distributes the entire dividend received from subsidiary, something like that. Intercorporate dividend exemption is there. But the point is there should be no tax on dividend, according to me. It's a double taxation. At least there should be an exemption or some kind of a deduction. Up to a certain limit, at least you exempt. Which is why, to avoid this only, every year, our man Ratan Tata comes out with a buyback offer in TCS. Every year, religiously, they'll come out with a buyback. Invariably, Ratan Tata will offer. The idea is, he's having huge, by giving up his shares, small portion, he will get money, being the buyback consideration. On that, he'll pay only capital gains tax. But that will amount to dividend for him. Instead of taking out as dividend and paying full tax, huge amount, here he'll take as buyback amount, he'll pay only on a small portion. But that's a little dangerous because slowly his stake in the company will keep coming down. And again, if intelligent people like me refuse to offer the shares on buyback, only Ratan Tata will offer. Why I will not offer? Because I know the valuation of this company is going to go up sometime or the other. Why sell now like that? So it's a very, very delicate calculation. But to an extent, you can avoid by buyback. Because instead of giving it to him as dividend, you will give it to him as consideration for buyback. He'll take the money. Anyway, the money will come out of the business. For him, it will be only capital gains. Lower tax. Okay. Listed company. So, anyway. Sorry, information only. So this is contained in this chapter 4 of the Companies Act, which means we should have taken it up long ago now. Whereas after 3 we should have come. Share capital and debentures, we should have seen this. Instead, we went into registration of charges, then we saw acceptance deposits. But what we have done is, we have finished the liability side, share capital and non-current liabilities. Okay. Now we go to P&L appropriation account. Dividend. So, what is the meaning of dividend? We have to see. Then final versus interim dividend. Declaration of dividend. Conditions. Transfer to reserves. Depreciation. Then one very, very important concept called declaration of dividend out of reserves. Finally, unpaid and unclaimed dividend. Just as we saw unclaimed deposit, similarly, unclaimed dividend. Dividend which is not claimed. And lastly, IEPF. I told you now, before, just now I told you, we'll be talking about the Investor Education and Protection Fund. What is dividend? Definition as usual. Stupidest definition. Dividend includes interim dividend. Chalo, thank you. Which means what? All provisions applicable to dividend will apply to interim dividend also. All provisions applicable to dividend will apply to interim dividend also. Whenever they say dividend, it includes interim dividend also. So don't ask whether this will apply to interim dividend. It will. Because dividend includes any interim dividend. What is interim dividend? First of all, dividend we know at the end of the year, audit is completed or going to be completed, board of directors meeting, we see the final figure of profit and see how much profit is there. After paying all the interest, etc., after meeting all the commitments, we see broadly how much is there. Retained earnings. So this year we made 100 crores. Fantastic. So we will decide. Let us give something to these fellows here, poor fellows. They have invested in our company. So we will declare a dividend. So they'll set aside some portion out of that, which means on the face value of the share, they will declare a dividend. Sometimes even 500 times 600. So per share, they might give 100 rupees. That means 10 times dividend. That is 10 rupees share, they will give 100 rupees. So 10 times the nominal value they will give. Okay, or 5 times the nominal value they will give per share. So if you are holding 100 shares, you will get 100 into 100, 10,000 rupees in your bank account. So dividend is the shareholders' return on their investment. Be careful. Dividend is calculated on the nominal or face value. Dividend is declared as proportion of nominal or face value. Whereas you would have bought it at a high price, market price. So your return may not be that rate. Suppose they are declaring rate to 20% dividend on the face value. On your cost, it may not be 20. It may be 3%, 4%, whatever. Something. Because your real return is going to come when you sell. Capital gain is what you are looking for. In addition to that, dividend. And there are some really good companies which have cash generation, which have cash profits, like FMCG companies, Hindustan Unilever, Procter & Gamble, Dabur, for that matter, Infosys, Reliance. These are all fantastic, dividend givers. They're decent dividend. Okay. In a year, I earned some decent dividend on my portfolio, but nothing to, I can't live out of that. I can't run my life out of that. Okay, not bad. What I do is I plow it back into my portfolio. Whatever dividend is coming, I reinvest it back into my portfolio and keep increasing the portfolio. Dividend is the shareholders' return. Dividend is recommended by board of directors and approved by shareholders. Shareholders cannot decide what will be the dividend. Shareholders cannot decide whether there will be dividend. If the board says no dividend, go, get out. That's all. Nothing can be done. Shareholder cannot object unless it is done with intention to mismanage the company. Very difficult. Merely non-declaration of dividend is not debt. Where I will get the money from? Out of this profit only. Further, I am going to expand next year for you only. Because the more I expand, the more sales I do, the more profit we get, the more your value is going. So they might take a view that your wealth maximization is more important than dividend. If that is a call of the directors, shareholders, that's all. So keep shut and go. That's all. Every part of the anatomy, shut and go. That's all. They cannot talk. But in case the directors are recommending, then it has to be approved by the shareholders. Shareholders may approve the rate recommended or a lower rate. They cannot recommend a higher rate. Suppose the board is saying we'll give you 40% dividend. Shareholders say no, we take only 30% like that. But they can't increase the dividend. Okay. So AB Limited has issued equity shares having face value of rupees 10 per share. The shares are currently quoting in the NSE at rupees 250 per share. The company at its AGM declared a dividend of 20%. Mr. Shekhar owns 1,000 shares, which he purchased at 300 per share. When the market was high, it has now come down to 250. Fellow is already crying because 50 rupees gone. Now he is getting 20% dividend. On what? On 10 rupees. Means 1,000 into 10 per share, 10,000 into 20%. He will get 2,000 rupees. Wow. That is 20% of 10 rupees, which is 2 rupees per share. So 1,000 shares, he'll get 2,000 rupees. What to do with that? Just keep quiet. Something. It's just an extra bonus. Enjoy. Okay. Shares are of two types, as you know, preference and equity. Equity share dividend is dependent on dividend policy and the availability of profits after satisfying the rights of preference shareholders. And as preference shares, you know that cumulative preference shareholders will get dividend even in an year of loss. They cannot be paid, but it will accumulate. And when there is money, it will be paid. Non-cumulative, no. If there is no profit, no dividend. There are two types of dividend, as we said, interim dividend and final dividend. See, interim dividend is final dividend at the end of the year. Before the AGM, at the AGM, they will announce it. Final dividend. Interim dividend is, see, around, let us say, September, March, April, May, June, July, August, September. April, May, June, July, August, September, 6 months. September results are good. Half-yearly result is good. Then the company, the board of directors come for a meeting in October. And they say, hey, this year we are predicting that we will make 200 crores or something nearing 200. Anywhere from 180 crores to 250, 220 crores, we are expecting this year profit. These poor fellows are there. Let us give them something in between. So even before the end of the year, 31st March, during the year itself, they will give them some dividend. So they'll say, let us declare an interim dividend of, say, 2 rupees 50 paisa per share. Take it. Now, finally, when they come for final dividend at the AGM, they will say 15 rupees per share. 15 rupees per share. Out of that, whatever has already been paid will be reduced. Now, interim dividend will reduce. The balance will be paid at the time of final dividend. Got it? Or they might say, in addition to the interim dividend of 2 rupees 50 paisa, we are giving you another 12 rupees 50 paisa, total 15. Take it. Enjoy. That is called interim dividend and final dividend. Interim dividend is at the discretion of the board. Many companies give it. Because, for example, MRF Limited, every quarter they give a dividend. Every quarter they give you dividend. Finally, they give you one dividend also. So it depends. The amount, boss, one share of MRF is what, 65,000 rupees, ma. But the face value is only 10 rupees, baba. 10 rupees. So if you are somebody is holding 5 shares, 5 into 2 rupees per share, yeah, 10 rupees you get. Nothing much. Don't mistake me for telling this, but that's how it is. Okay. Interim dividend will be declared by the board of directors when? At any time during the period from closure of financial year till holding of AGM. Okay. Any time you can declare. Okay. From 1/4 to the holding of AGM, you can declare interim dividend. Interim dividend can be declared out of surplus in the P&L account. Meaning, accumulated profit है ना, P&L preparation account में है ना, accumulated last year till 31st March का profit है ना, accumulated opening balance plus profits of the financial year up to the date in which the dividend is sought to be declared. Profits generated in the financial year till the end of the quarter preceding date of declaration of interim dividend. That's why I said quarter. So let us say 30th September, second quarter ending. So you take the profits generated up to the second quarter ending. That can be used for declaring interim dividend. Okay. Entire year you need not wait. You wait for 1 quarter to get over. See what is the profit till the end of that quarter. Out of that you can declare some dividend also. As I told you, you can check up MRF Limited. They declare once in, for every quarter they declare. At the end of every quarter they declare. How many times the company can declare dividend in a financial year? Is there any restriction? Koi nahi hai bhaiya. Nothing. You can declare. Koi illa. Kuch nahi hai. Sorry. I am very poor in Hindi. I'm so sorry. Why I try to speak Hindi? God only knows. I think you Hindi speakers will kill me for speaking such ungrammatical Hindi, but I'm trying to pick up the language because I feel that I have missed out on learning Hindi in my school because, you know, I live in a very, very deep southern state where there was a general feeling that you should not learn Hindi and we should learn only our mother tongue. Of course, I learned Sanskrit and French. Instead of learning Hindi, I learned Tamil till 10th standard. Then I learned French till +2. Then I learned Sanskrit. I'm a Kovida in Sanskrit. Unfortunately, I did not learn Hindi. So now I try to. So kuch nahi hai. You can any number of times. Every month also you declare. But normally, see boss, there is no limit. Doesn't mean that you will declare. Because one declaration of dividend is a huge job. I will assure you that for many companies, I do a dividend audit. Before declaration of dividend, we will verify all the procedures and say that they have correctly done it and give the certificate to the audit committee and management. It's a huge process. So, intelligent CFO will not commit every month and all. Quarter itself is too much. Maximum 6 months, once during the year, once end of the year, once. Common sense. Otherwise, there's no limit. You can take every month. See, now you will ask me another question. Darshan should ask me, sir, in first quarter, I had heavy profit. Second quarter also heavy profit. I declared interim dividend. Suddenly it became loss. In case where the company has incurred loss in the current year, financial year, up to the end of the quarter, immediately preceding the date of declaration. This question is, first question is, there is no answer. Suppose there is a loss, by the end of the year, it becomes a loss, what to do? Then you should be safe. That is why board of directors have to be very careful while declaring interim dividend. Unless they are 100% sure that the profit is there and it will not be corroded or eroded, only then they can declare. Otherwise, no. It's a huge call. Because if tomorrow the company becomes a loss and the dividend you declared, you can't ask. You can't tell the shareholder, Baba, please give back your dividend. We need the money. No. So you should be very, very careful. So generally, interim dividend will be declared only by companies making huge profit. So they are sure minimum this year we will make so much profit. Like that. They are all really big companies. Only they will declare interim dividend. Got it? Or a company which has got a windfall profit this year. The MD thinks, hey, we got this nice profit. Let's declare a dividend. Therefore, know for sure that the profit is there. Okay. Here is a company where the company has incurred loss during the current financial year. Up to the end of the quarter, immediately preceding the date of declaration of interim dividend. Meaning, earlier year there is a profit accumulated, but current year, first and second quarter, loss. Then, interim dividend shall not be declared at a rate higher than the average dividends declared by the company during the immediately preceding 3 financial years. See, the company has made a habit of giving interim dividend. So the shareholders are used to it. So every year they have been giving good dividends. Now suddenly this year they find the first 2 quarter loss due to pandemic, due to some unforeseen circumstances. Still, they might want to declare dividend. Why? Because they might be having profit accumulated. Friends, current year only lost 2 quarters. But up to 31st March, accumulated profit है ना P&L account में. Not reserve. Not reserve. I have not transferred it to reserve. It is there P&L account का opening balance. You understand na? P&L account का opening balance है ना? That is huge. Right? Out of that, you can declare. That is not reserve. So this company wants to declare. Though this 2 quarter loss, I want to use this profits of surplus in the P&L account. Got it? I want to use it. I can. But if these 2 periods are loss, then if the quarter, up to the quarter immediately preceding, there is a loss, then such interim dividend shall not exceed a rate higher than the average dividend declared by the company during the immediately preceding 3 financial years. So you have to find out the average dividend, and that rate cannot exceed the rate of average dividend. Now, once you declare an interim dividend, once the board of directors declares interim dividend, the amount of dividend, including interim dividend, whether it is final dividend or interim dividend, shall be deposited in a scheduled bank in a separate bank account within 7 days from the date of declaration of the dividend. Within 5 days from the date of declaration of such dividend. The money should not be in your hand anymore. If it is announced by the board, interim dividend will be announced by the board. Final dividend will be recommended by the board and approved by the company in AGM. Whatever it is, within 5 days from the date of declaration, you have to deposit it in separate bank account. And it cannot be taken by you. It has to be paid only to the member, right? That is 30 days. Within 30 days, you have to pay. If you don't pay within 30 days, within 7 days, you have to deposit. All that we will see later. But that money should be immediately put in the bank within 5 days. Even that 5 days are giving you a sort of grace period to locate and put. 5th day, the money should be in a separate bank account. From there, within 30 days, it has to go to shareholders. Of course, 5 days is only the upper limit, Baba. Next day also you can pay. Nobody is preventing you from paying. But whatever it is, the money should be deposited in a separate bank account within 5 days. Got it? You cannot say 30 days is there. No, 30 days enough. Sir, I have to pay within 30 days. No, sir. So I will rotate the money for 25 days, sir. No. Within 5 days, you have to put it in the bank account. See how the mind of the human being works. Huh? Especially finance geniuses like you will be thinking, after all, what is there? From the date of declaration, statutorily, I have 30 days. I will rotate it. I will use it for my working capital need. To that extent, I will save on the bank interest. Like that, all you will argue. No. Within 5 days, you deposit it. Okay. Above condition shall not apply to a government company in which the entire share capital is held by central government or state government or whatever. Because government company, you cannot doubt the government. Now, come on. Government is sacred. Yeah. You can't doubt the government. Am I correct? So basic differences between interim and final dividend. Meaning, interim dividend is declared and paid during the accounting year, before finalization of accounts for the year. Final dividend is recommended by the board of directors and approved by shareholders at the company's AGM after the close of the financial year. So, of course, you can declare interim dividend even after closing the financial year. You can declare interim dividend even after March, right? Up to the date of AGM, you can declare interim dividend. Usually, it will be declared before March. Because once March comes now, we'll be going for an AGM anyway. So we'll wait. But before March, they will declare. From 1/4 to 31/3 usually. Or 1/4 to date of AGM, you can go. That's all. In between. Whereas this is at AGM only, it will be declared. Announcement here, it's announced by the board. There, it is recommended by directors and approved by shareholders. Then declared. Time of declaration, before preparation of financial statements, interim dividend will be declared. Whereas, only after preparation of financial statements, arriving at the profit, audit, even the auditor will be having a look and then they will say, sir, we are proposing dividend. Okay, that also he will take into account because proposed dividend has to come now in the books. But if you look at, I think India is, you don't have to provide. On payment basis, you can take it in the year in which you actually pay. That's not for this one I'm saying. Articles of association. It is declared, interim dividend is declared only when the article specifically permits. Whereas final dividend is nothing to do with articles. Final dividend, it is statutory, you can give. Okay. Now, here we go with a small problem. Let us see. PET Limited incurred the loss in business up to current quarter of financial year 17-18. 18 March, year ended, up to the second, up to current quarter. The company has declared dividend at the rate of 12, 15, and 18 in the immediately preceding 3 years. Right? In spite of the loss, the board of directors of the company have decided to declare interim dividend at 15% for the current financial year. Examine the decision of PET Limited, stating the provisions of declaration. See, such a simple question. This is a question asked in May 2018, ma. Repeatable question. It is not at all complicated. Can you answer? Can they declare at 15%? Yes or no? I await your answer. Very funny question. What boss? Nobody is answering. Are you all listening or not? I thought it was correct. The average dividend is 15. 12 plus 15 plus 18 divided by 3, magic number 15. So they can declare. It so happens 15 is exactly the median and the mean. It is both bar X and the median. That is why you get this. It's one of the rare situations where the median and the mean are the same. So you are able to get. Beautiful, beautiful, beautiful. So how will I get my 4 marks? That is very important now. This type of a question, what you should do, first you should say, PET Limited has declared dividend at the rate of 12, 15 and 18 in the immediate 3 years. As they have incurred loss during the current quarter up to financial year, they want to declare a interim dividend of 15% for the current financial year, interim dividend. Okay. Then you should say, see, you have represented the facts now. Then what you should do, you should write 123.3 correctly. This paragraph you have to write. This paragraph you have to write completely. This is the answer. Then you should say, in view of this provision, PET Limited can declare interest at the average of the immediately preceding 3 years. Then calculate 15%. As the average rate of dividend declared during the immediately preceding 3 years is 15%, PET Limited can declare the dividend. The decision of PET Limited is correct. You have to write so much to get 3.5 marks. Okay, if you want 3.5 marks, you cannot say, you want a 4 marks question, you cannot say, PET Limited's decision of PET Limited is correct. Please proceed. Like that, like MD, you cannot put a note there. Okay, you have to give a detailed argument as to how you arrived at your conclusion. Okay. Beautiful, beautiful, beautiful. All of you are now familiar with this part. This is a multiple choice thing. Okay. So see how much I have written here. Now, dividend can be declared out of profits of current financial year. Means current year profit. Provided it is profits are arrived at after providing for depreciation in accordance with Schedule 2. So as per the Companies Act, you have to provide the depreciation. If you declare dividend without providing for depreciation, it is void. You have to, you will be, see, you cannot ask the shareholders to give it back. But the very important, you have to provide for depreciation. Similarly, you can use profits of any previous year remaining undistributed, meaning surplus in the P&L account other than current year. But that has to be arrived at. In those years, the depreciation should have been provided. So both A and B can be used, or money provided by the central government or state government for payment of dividend guaranteed by that government. In case central government or state government has told, in case you declare there is no dividend, we will guarantee. Sometimes they might say, for the promoter, they might say, hey, we want you to invest in a priority sector. We know it is a little difficult to run business there, but still, minimum return, I will assure you, dividend, I will give you, ensure that you get 10% now. So, in case the company is not able to declare also, state government can provide money for the payment of dividend guaranteed by the government. Right? Now, the profits for declaration of dividend cannot be any profit. Right? You should arrive at it after removing certain items. So you take the profits of current year after providing for depreciation, etc. You have the current year profit now. Profit for the year after tax and all you have now. After tax profit. Boss, dividend is not a charge against the profit. It is an appropriation. Therefore, after paying tax, whatever is left, only you can pay dividend. Out of that, you reduce any previous year losses. Meaning, if there is any negative in the P&L appropriation account, you got an opening negative balance, debit balance. reduce it. Then, in case you have not provided depreciation in previous years, now you reduce the depreciation. Any unrealized gains, which are simply you're putting, for example, any expense which is any income which is shown as which is unrealized, notional gains, for example, revaluation or notional profit on unexpired contracts, nothing. All that should be removed. Gain from revaluation of assets. You cannot declare dividend out of revaluation reserve. You cannot declare dividend out of revaluation reserve, or you cannot use the gain from revaluation of assets for declaring dividend. Similarly, capital profits cannot be used for a dividend. Pure capital profits, profits that are linked to capital items, like on forfeiture of shares, there's a capital reserve. On merger, there might be a capital reserve. You can't use that for declaration of dividend. Got it? But there is one small point you want to note. Suppose I have sold an asset and I have realized the profit in cash, meaning money. The profit is, the consideration is realized in money. The profit is realized in money and is available to me. That can be used for paying dividend. See, we might have had some surplus land, ma'am. We sold that land. We got a huge amount, capital gain. We paid the capital gain tax, etc. Still, we got leftover something. Now, that I can give it to the shareholders. Now, how I will give? So I can give it as dividend. Though it is capital in nature, it is not, strictly speaking, capital profit, because capital profit should be associated with raising of capital or something to do with capital. I told, just now I mentioned, it is after tax. Profits of current year is not only after current tax, it is also deferred tax. Everything should be reduced. Finally, profit for the year will be there. That is the profit. From that, you have to do all these things. If I remember, I mentioned it. Maybe I said it very fast, so you missed it. So, profit for the year is profit of after tax. Okay. See, suppose there is any profit you are showing in the P&L account, you will reduce. Similarly, if there is any loss you are showing in the P&L account on account of fair valuation, meaning some Ind AS provisions want you to do fair valuation, especially operating leases or sometimes in case of when you are recognizing certain assets and all in the books, you might have to do it a fair valuation again. In which case, purely for carrying an amount of asset or liability as a fair value on its fair valuation, if there is any impact on the P&L account, to that extent you have to either add or less. If it has reduced the profit, add. If it has increased the profit, less. So finally, what is left over is pure profit, which is from the generation of your business, which is available with you in money terms. Please give it to your shareholders as dividend. Now, dividends shall be paid by a company only to the registered shareholder of such share, or to his order, or to his banker, and shall not be payable except in cash. Again, here the word cash is used in a peculiar way. Cash doesn't mean cash, that is currency note. It means it should be paid only in rupee terms. You cannot adjust account. You cannot say, for example, our company is manufacturing Cadbury chocolate. So instead of giving you dividend, we will send you a crate of chocolate, take it, enjoy. No, it should be paid only in money. Okay, like that. Got it? You cannot satisfy it by giving something else. You have to give money. Here the word cash is used in the context of money. It should be paid only in money. Declaration of dividend does not affect the company's power to issue fully paid up bonus shares. Please understand. You can issue bonus shares and also pay dividend. But after declaring dividend, you cannot say, I will not pay the dividend in money. Instead, I will give you shares in the company to that extent. No, not possible. Shares cannot be issued in lieu of dividend. We saw this already when in share capital also. Do you remember? When I mentioned it there also. Meaning, you cannot declare dividend, and then when they come and ask, please give the money. No money. You take one share. Like that, you cannot tell. Okay, it is not allowed. Money. If you declare the dividend, pay the money. Transfer it to his account. And it can be paid only to the registered shareholder, nobody else. Or to his order, meaning sometimes you might say, pay to so-and-so. You can pay, nothing. Payment of dividend in cash means payment by check or warrant or in any electronic mode. Today, we don't give checkbook and all. Straight away, DPID hai na, all of you are dematerialized shareholders. DPID hai na, NEFT details hai. One single instruction, check. Our banker will transfer. Zing, that's all. Matter of 5 minutes, all the accounts will get. Or maybe half a day, everybody will get the money. Then we will have to reconcile. The dividend payment account reconcile is a huge job. Okay, because some will be credited, some will be bounced. So we should see who has not got. Because later on we have to go and after some time you have to transfer it to the separate account and all. Okay. Directors of East West Limited proposed dividend at 15% on equity shares of 2018. The same was approved in the AGM held on 24th October 2018. The company announced 28th September 2020 as the record date for payment of dividend. Means what? Any shareholder who is entered in the records of a depository or register of members on 28th September, if your name is there on 28th September 2020, you will get dividend. So that is called record date. So on 24th October, they announce in the AGM. There they say 28th September 2020 is the. I'm sorry. This must be same year only. It cannot be different year. I'm sorry. I will change that. Because before somebody points it out, I will change it myself. See, this is 28th. I will make this 18. As the record date for payment, it's 18 only. It cannot be 2020. So whose name is on there on the 28th September 18 will be getting. The dividend is declared on 24th October as the record date. The directors declared the approved dividends. Mr. Binoy was the holder of 2,000 equity shares on 31st March 2018. But he transferred the shares to Mr. Mohan, whose name has been entered on 18th June 2018. Who will be entitled to the above dividend? Only the person whose name is entered in the register of members. Mohan's name has been registered on 18th June. So on 20th September, he is very much a member. So Mr. Binoy will not get. Mr. Mohan only will get. Am I correct? Because on 24th September 2018, am I correct? 24th September. On 18th June, it has been registered. So 18th June itself, Mohan comes in. So how Binoy will get it? Only Mohan is entitled. At the AGM, the dividend will be announced. Then, but they will indicate who are all should be there. See, this is the date of conveniencing. 20th September is the date of convenience. Okay. So if you say on that day who are all other, on that day we make the payment. Okay. Mr. Sudhanshu, you have put the word warrant and then put a question mark. Kindly elaborate your question. What are you asking? kindly ask a more elaborate question and I will answer it. I can't guess what you are asking. Like if you put warrant question mark, what are you asking? Are you asking about dividend warrant? What are you asking about? Or are you asking about share warrant and how they will get dividend? Whatever it is, if you ask me, I will answer. But you have to ask me fully. Okay. According to section 123, the dividend shall be, this is the example, you have given the answer correctly. Okay. So Mr. Mohan, who is the registered shareholder only, will get. Binay will not get. See, Binay cannot say, hey boss, I was with you for the year now, so I should get. No. On that date, whoever is there, which is why on 28th September, October itself, there will be a come dividend executive rates will be there. Because they will know. See, the meeting is held on the AGM is, friends, the AGM notice will be given 21 days before the meeting. Yeah, why not? It can be. When you study management and administration, you will see AGM can be held beyond, provided you get permission from the Minister of Register of Companies, you can hold. You can get extension for holding AGM. You can. Okay. See, this topic you will understand better when you come to management and administration. Okay. At that time you will. One more thing. See, I am giving I am declaring a dividend of whatever, 15%. I'm going to print it in my AGM notice, and it's going to be there in my director's report. That document will be going to everybody when? 24th October, so it will go to them well in time. So by then they will say this on this date you have to do it. See, one more thing. This problem is given by the institute, not by me. I have not said this problem. Whatever it is, the bottom line of this problem is whose name is mentioned on the record date will get the dividend. Okay. AGM can be held after 30th September because 15 months, there is 6, it should be held within 6 months from the close of the financial year. If you want to, or 15 months between two AGMs, you can extend it by another 3 months. Okay, provided you get the approval of the registrar. This is to answer Mr. Reddy's question. Now, what is a reserve? I think you know it. I don't have to waste your time. Means out of the profits, out of the accumulated profits, you will cull out or you will carve out or you will clearly identify a certain amount and say this will be transferred to reserve. Idea is we will not use it immediately for payment of dividend. It will be kept for expansion, etc., etc. So that is called transfer of profits to reserves. In those days, I'm talking about the old law, there was a compulsory transfer of profits to reserves in those days. But 10% had to be compulsorily transferred, blah, blah, blah. Not there. Transfer of profits to reserve for any financial year has been left to the discretion of the company. Company means board. Whatever the company wants to do, let it do. And company here means board. So the board takes the call. So a company is free to transfer any portion of its profits to reserves as it may deem fit. May also decide not to transfer any amount to reserves. So this year, no transfer to reserves. No problem. If you want to transfer, transfer. This is your call. Nobody can force you. No compulsory, only optional at your discretion, at the discretion of the company. YZ Limited is a manufacturing company and has proposed a dividend of 10% for the year 17-18. Out of the current year profits. The company has earned a profit of 910 crores during 17-18. YZ Limited does not intend to transfer any amount to the general reserves. What type of question? Yeah, 3 marks, Laddu question. This is all Laddu question. Laddu means they're putting it in your hand. If you go to Tirupati, after darshan, when you come out of the darshan, they will give you Laddu. So when you go there, you get the Laddu come, that's all. You don't have to do anything for it. You understand, na? You don't have to do anything to get that laddu. Just to finish darshan and come, they'll give you one laddu. Take it and go, eat it, enjoy it. Like that, 3 marks. Straight away laddu they are giving you. In your hand, they are giving you. Take it or leave it. Provided you know this provision, you will write. If you don't know, you will write something. If you know this, you will, according to section 123, blah, 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 you will write 3 marks straight. Even if they don't give you 300, they'll give you 2.5 marks, they'll give you. Okay. So you should pray to God now. My paper, if you want to see, sometimes when I go to pray to God now, for example, when I prepared for my examinations in those days, when I was 20 years old or 18 years old, 19, 21 years old, I used to go. At that time, when I pray to God now, I will tell him, Swami, I have studied. I have done my best. So I have identified about 40 questions, which are very probable of coming in the exam. I have studied them. I have studied well. These questions I have studied extremely well. Now, Swami, all you have to do is one small request. Out of this 45, at least about 5 or 6, you make it come in the exam. Yeah. That's all. So now Swami also very happy with me. God also, because so many fellows are coming to me and saying, so please help me pass the exam. Please do something. They are not telling me what I am supposed to do. Whereas I am telling my God very clearly, please, 45 questions. Out of this, I need only 5. Some tough questions, let it be there. I have no problem. But out of that 45, at least 5 questions surely will have to come. You will be very surprised. Whenever I went to the exam hall, out of those 45 questions for each subject, I've got 35 to 40, 50 questions. I'll have prepared well, topics and all. Definitely 5 or 6 topics will come. And I will know it well. So solidly, I'll go and grand slam. I'll just raise up and slam it down on the court. I will guess. That's it. That will take me right up to 50 marks. Thereafter, journey is in my hands. 50 to 65 was in my hands. Up to 50, sure. But that is happening because I'm not wasting my time studying everything. Asking if EPF is a deposit or not. I'm only doing important. Concentrate. This method, if you use, chance of getting mark very high. But many students don't like that method because they see it as a slightly risky method. For them, there is a better method. What is that? Take the Institute Ka material, start at page number 1, go right up to page number last, study it fully. Questions should come only out of that, no, sir. Absolutely correct. Please go and do that. Or you approach my approach, where you find out what is important, study that. So in my lectures, mostly I'll be giving you important topics. I'll say, hey, important, study like that. Okay. So, yeah, why is that limited can declare dividend? Because just you have to write this. Okay. And then you have to answer. Good. Sorry for giving you some unnecessary inputs on how to prepare for exams and all that. My job is to teach you company law. Why should I tell you how to prepare and all? What right do I have? Moving on. Declaration of dividend when there is inadequacy or absence of profits. Okay. Inadequacy. Inadequate means not enough. Inadequate or inadequacy means not enough. Okay. It is not enough. Not enough to pay. See, I want to declare a dividend. The total amount comes to 2 crore. My profit is only 1 crore. So I can't pay 2 crore now. It is inadequate. Or 0, loss, absence. I want to declare dividend. So, where in any year, there are no adequate profits. There is a profit is not enough for declaring dividends. The company can declare a dividend out of the profits of any previous year, transferred by it to the reserves. Okay. So, question, can I declare dividend out of profits of the previous year, transferred to the reserves, meaning declaration of dividend out of accumulated or reserves. Reserves. P&L account exhausted. P&L account gone. Nothing, not enough. But I have dividend reserve. Can I use the reserve? Which type of reserve can be used? Only reserves which have been created out of profits can be used. Please note, you can't take revaluation reserve and use it. No. Am I correct? You can't use debenture redemption reserve. You cannot use capital redemption reserve. No. All these are earmarked reserves. You cannot touch them. You cannot use securities premium account. Securities premium and CRR can be used only for declaring fully paid up bonus shares. Nothing else. I mean, security premium, of course, you can also use it for buyback, etc. Thank you, Mr. Reddy, for that. So nice of you too. I mean, sometimes I make this type of comment because I get worried. You are telling all these things. Maybe the students are not happy with what you're saying like that. But these words have made me very happy, Mr. Vishwanath Reddy, and thank you. No problem. I'll tell you, I'll let you in on one more secret. This is a live learning classes and all that. Now, those days, up to 2012, I used to teach physical classes in Chennai, where I used to teach the subject fully. Means from beginning to end, I will teach. And the last session, even the middle, some students will not come, they'll bunk and all. Some topics they won't come, they'll come for important topic and all. But that last day, they will all come, the entire class, because that day I will give them 36 or 40 questions. I know it's wrong, but I used to do that. Not in the sense, this question will come, this question, not like that, but topics, subtopics. These are important, read like that. So many students will come and note it and go. And that I will do with one method I will do. I used to go through the last 10 years suggested answers. And then I will do that I was taught by my guru, Professor K.S. Anantaraman, how to do it. So it is a very, very tricky method. You have to go and you have to see. Then there's a probability also is there. You can't be 100% sure. So you have to hedge your bet also. And finally, you'll come out with a list. That job itself will take me 2.5 to 3 hours. I will sit on a Sunday and I will do it. Then I'll have the list ready. Then I will use that list. But the students will go. But these are not my students only I'll give. Not everybody. Means they are students who I have thoroughly taught them the topic. Nothing is left out. I have taught everything. But in the last minute, these questions are important. Like that I will give. That used to be very popular. In fact, it was so popular. 11:30, 12 in the night, some boy will call from Andhra Pradesh and he will say, "Sir, I want important questions, sir, important questions." Boss, wait a minute, you send a message, I will send in the morning. So I'll give you my email ID and say, you send a mail, I will send in the morning like that. Fellow has studied nothing, but he wants to, he's in the last minute, he's now ordered to, somebody told like this. Even that fellow will get 45 because he would not have studied, Maha. Even if I give him 40 questions, 5 days for the exam, what he can study? But a student who is already well prepared and who is knowledgeable, he concentrates on this, goes to the exam. See the level at which he'll operate. This is only a technique. Not, as you rightly say, Bhumika ji and Reddy ji, it is a tips. Okay, these are tips. Tips, no, not thing. Just take it as a tip. How to look. It worked for me, not only in law, every subject, accountancy, casting, not only for CA, for ACS also. 4 exams I cleared, first attempt, all India rank, 4 times I got. Just because this one technique I adopted. Not studying completely, but rather understanding which is important, which is not important, I will ignore. I will not waste my time breaking my head on where they have not even asked question, I will not go and break my head. But where they have asked question, I will know it well. And even if it is tough, I will somehow learn it. Because definitely it's going to come. So I won't leave that, is the point. Okay. So this is a general suggestion I'm giving you. Okay, views expressed herein are the views of the faculty and not the views of the Board of Studies or the Institute of Chartered Accountants. Okay, personal view, take it with a pinch of salt. Okay, good. We have to give a disclaimer also. You can't say something and go. When I used to take in other coaching centers also, I used to say, views expressed herein are the views of the faculty and not of the coaching center. Okay, personal opinion. Before I move on, one more word and then I'll move on. Boss, I'm a chartered accountant. We are the only people who can give opinion. Of course, doctors can give medical opinion. We can only give opinion. Okay, our opinion we can give. Wonderful. Now, you can declare dividend out of reserves, but certain conditions are to be done. Okay. I will come to that later. No dividend shall be declared or paid by a company from its reserves other than free reserves. That's why I made that point. Now, what is free reserves? Means such reserves which, as per the latest audited balance sheet, are available for distribution as dividend. You are saying I cannot declare out of free reserve. Then you are saying what is free reserve? Not available for distribution of dividend. Generally, revenue reserves, reserves created out of profits. Okay, any reserve created out of capital profit you cannot take. Any amount representing unrealized gains, notional gains, revaluation, no. Capital profit, be careful. If it is pertaining to share capital, for example, you might have sold options. ESOPs, before they get the share, they have to buy an option from you. You would have sold the option at 2 rupees. That is an income for you, but not free reserve. It will be in the balance sheet under reserves and surplus, but you cannot use it for declaring dividend because it's a capital item. Okay. Any change in carrying amount of an asset or liability recognized in equity, including surplus in P&L account on measurement of the asset or liability at fair value. See, the cost may be different from fair value. In many cases, under the accounting standards, you have to represent the asset or liability at a fair value or the discounted value or whatever. In which case, there may be actual cost may be less or more. So there may be a loss or profit on that account. That loss or profit, if it's going to the P&L account, if it is a profit, then you cannot use it for declaring dividend. That's why, at the time of computation itself, we removed it. Okay, the last item, add or less. Okay. Now, we are going to a very, very important topic from the exam point of view. The time now is 7:30, almost 7:30, 7:28. So, declaration of dividend when there is inadequacy or absence of profits. Inadequacy or absence of profits. And there is what to do. So you can declare a dividend out of reserves. How? The following conditions have to be satisfied simultaneously. Simultaneously means at the same time. Before dividend can be declared out of reserves, this is Rule 3 of the company's declaration of dividend, Rules 2014. So these 3 conditions are given in Rule 3. All the 3 conditions are to be simultaneously satisfied, or you should satisfy all of them. Only then you will be able to declare dividend out of reserves. Before we go there, I will announce a small break. Small here, 10 minutes ka break. Okay? So go for a biology break, enjoy your cup of tea and come back as quickly as possible. Break. Welcome back from your well-deserved break. Moving on with the topic, dividend, declaration of dividend. When there is inadequacy or absence of profit, you have to satisfy three conditions simultaneously. Let us see these conditions, understand them, and then apply them. Right? First condition, rate of dividend, condition 1. See, what is the situation? P&L account balance not sufficient or negative, no problem. Look at the balance sheet. Free reserves hai, general reserve hai, good. Now I want to declare a dividend out of that. So the money is going to come out of the general reserve, no problem. So I will have to retransfer it from the general reserve to P&L appropriation and declare dividend, not a problem. Now, they are saying the first condition, they are saying rate of dividend, the rate, the percentage calculation should be not exceed average rate of dividend declared during the immediately preceding 3 years. So the rate of dividend should be less than or equal to the average rate of dividend declared during the immediately preceding 3 financial years. I have given it here as a formula. Rate of dividend less than or equal to RD1 plus RD2 plus RD3 by 3. Easy to remember. But you have to write in the exam, you can't write the formula. You have to say the rate of dividend to be declared shall not exceed the average rate of dividend declared during the immediately preceding 3 financial years, or average of the dividend declared during the immediately preceding 3 financial years. So RD1, RD2 and RD3 are the rates at which dividend was declared by the company in the immediately preceding 3 years. In the old law, this was 5. Now it is 3. The earlier law, it was 5 years average. Now they have made it 3. Now you will ask me a question and rightly ask me, sir, suppose the company has not declared any dividend, then how I will calculate, sir? Then this condition shall not apply. Go to the next condition straight away. So if you have not declared dividend, see, for example, if you have not declared dividend, then doesn't mean that you cannot declare now. You can. The rate condition won't apply to you. That's all. Okay. But if you have declared in the last 3 years, then average should be taken. So if you are not declared any dividend in each of the 3 preceding financial year, this condition will not apply. So this will apply only to companies which have declared dividend for 3 immediately preceding financial years. In which case, the rate now proposed shall not exceed the rate of dividend average. Okay, sir. Now that condition is satisfied. Now you'll have to move on to second condition. What is that? Quantum, amount. Quantum means amount. Okay, amount to be drawn. Quantum. Okay. The total amount that can be drawn from the accumulated profits should be less than or equal to 10% of paid up share capital plus free reserves. So you have to take the paid up share capital, free reserve, total 10%. So whatever rate you are going to now declare, if you calculate the dividend on the face value, on the nominal value, when you calculate the dividend, an amount will be there. That amount cannot exceed 10% of paid up share capital plus free reserves. Clear? Now, not only that, the amount so drawn shall first be utilized to set off the losses incurred in the financial year in which dividend is declared. So in the P&L appropriation account, there is a negative balance now. That should be first reduced from this amount. Only the balance can be used. Thereafter, only thereafter, any dividend in respect of equity share shall be discussed. So there is already an current year ka loss hai na, P&L appropriation account mein hai na, so that has to be now first reduced. Net, what is left over only can be used. So this is the second condition. All conditions are to be satisfied. Rate has to be satisfied. Quantum has to be satisfied. The least only you can give. Finally, balance of reserves, meaning after you have paid the dividend, the free reserve will come down. Now the reserves will come down. Now, obviously, because you're going to transfer from general reserve to P&L appropriation. And from that, you are going to make the payment now. So once you do that, the reserve will come down now. Also, you will adjust it against the losses now. So once that you do that, it will come down now. So in those cases, then the balance of reserves after such drawal shall not fall below 15% of its paid up share capital as appearing in the latest audited financial statement. Right? So you have to find out what is the paid up share capital, calculate 15%, keep it. Then you see what is the reserve remaining after the dividend is paid. After you remove the dividend, what is the amount? This balance of reserves should not be less than 15% of paid up share capital. This is the third condition. All the conditions are to be satisfied simultaneously. Now, I am giving you a question. I have explained the three conditions to you. I am giving you a question here. Humble request. Tell me what is the rate at which dividend can be declared for this year. For the current year, the company has incurred a loss of 30 lakhs. It has a paid up capital of 200 lakhs and reserves 240 lakhs. In the earlier 3 years, they have declared dividend 9, 10, 12, etc. Now, apply these conditions and tell me what is the rate at which dividend can be declared. What is the rate at which dividend can be declared for the current year? I will give you time. You tell me. $10.33 or less than this. I wish I had a multiple choice option. Then 10.33 will be one of the options which you have obtained by dividing 9 plus 10 plus 12. Na? Am I correct? 22 plus 9, 31 divided by 3, 10.33. Sir, average rate is 10.33, ma. All of you are stopping at condition 1. Who will go to condition 2? Who will go to condition 2? All of you are stopping at condition 1. Who will go to condition 2 now? I will put condition 2 here. Who will go to condition 2? 10.33, okay. 10.33 is the average rate, but it is not the rate at which you can declare dividend. Go on, do it again. Please note down the numbers. 200 paid up capital, 240 reserves, 30 loss, 9, 10, 12. Or take a photograph of this and keep it. I'll show the condition. Average you have done. Fantastic. Now, Kavita Lansal, beautiful. I'm unable to say that you are wrong. Let us see. Wait for form. At least 1 or 2 more people to give the answer. And Kavita ji, kindly check balance of reserves also. Because the third condition also has to be satisfied now. So you are going to draw now. After you draw, minus the reserve, the balance of reserves should not be less than 15% of paid up capital. 14 lakhs is correct. That is the quantum. I am asking rate. So what is the paid up capital? 200 crores. Na? So 14 divided by 200 into 100 gives me 7%. As told by Kavita ji, which is the correct answer. 7% is the correct answer. So as most of you have wrongly told correctly initially, you are not wrong because you have applied the condition 1. So you are coming to 10.333 recurring. When I apply it to my capital of 200, I get 20.6 lakhs. This is the amount I have to spend for declaring 10.3%. But condition 2 puts a limit on my quantum. What does it say? It says 10% of paid up capital plus free reserves, 200 plus 240. Assuming all reserves are free, we get 440 lakhs. 10% is 44. That should be first utilized for reducing the loss. The amount should be first used for reducing the loss, right? And then the amount available, 14 lakhs, only can be used. So if you declare 10.3%, you can't, because you will be violating condition 2, Condition 2, only 14 lakhs you can give. That 14. So how do I get 7%? Or how does Kavita ji get 7%? Simple. 14 divided by 200 into 100. Paid up capital is 200 now. 14 lakhs is on that 200 now. So what is the percentage? 7%. Got it? Still we have to see the final limit, which is the amount to be drawn is 14 lakhs now. So 240 minus 14 gives me 226. 226 is much more than 15% of 200 lakhs, which is, So the drawal is 14. Proposed drawal is 14. Beautiful. Kavita ji. Beautiful. Excellent. I'm so happy that you have given the right answer. So 226 balance from reserves, which is more than 15% of 200 lakhs. Thus, the company can declare a dividend of 14 lakhs, that is at a rate of 7% on its paid up capital of rupees 200 lakhs. Beautiful. So I hope you are clear with this thing. Correct, sir. 440 into 10% minus 30, 14. 14 lakhs rupees will translate to 7%. And also test for condition 3. See that in case you draw 14, the reserve balance should not come below 15% of paid up capital. So you calculate 15% of paid up capital and see that this is far above. 226 is way above 30. So which is no problem at all. Any doubts? I will answer. Very good. Darshan says he is clear. I'm happy. Okay, now. So we have seen this. Now we have to move on to other topic, which is prohibition on declaration of dividend. Meaning, if a company wants to declare a dividend, it should satisfy certain conditions. Normally, it has to declare certain conditions. There should not be default in certain matters. A company which fails to comply with the provisions of section 73 and 74 relating to acceptance and repayment of deposits. You remember when we spoke about deposits, I kept on telling you, non-repayment of deposit and non-payment of interest on deposit is a danger. Because wherever you will find, they will say, if you are defaulting on deposits, you cannot declare dividend. If you are defaulting on deposit, you cannot issue DVR, differential voting right shares. If you default on dividend, you cannot make intercapital deposits. There are so many situations where if you default on deposit, you cannot do. So this deposit is a very, very important point. Whenever you accept deposits, please repay. If you delay or default, you're gone. So that is, definitely Kavitaji, because you answered in a nice way. So I will appreciate. Okay. Now, having said that, so 73 is very, very, very important, which is why, many companies prefer not to accept deposits. There's a huge nuisance. See, you have to get from all Tom, Dick, and Harry, be answerable to those fellows, employ one deposit manager, 2 executives to handle it, depositor query, depositor grievance. And what sort of grievance? I came to their office, they did not give me coffee, or my deposit fell due on Friday. The money did not come on Saturday, it came on Tuesday. Right, Baba, the bank would have been on holiday. What can I do? They come and keep on, senior citizens will come and keep complaining. So many companies stopped taking deposits. They said, go to hell. I will as well go to the bank and borrow. What is the big deal in accepting deposits like that? Because slightly lower interest rate. Even then, if you go to a bank and negotiate, you'll get better rate than this deposit rate. Not able to understand. In those days, it was a good source of funding, because in those days, banks were very reluctant to lend. Especially for working capital, they were not. So you could use this as an additional source of, and that too, remember, if you go to a bank, you have to give him collateral security. Here, no, deposits are unsecured. Unless you are giving security, which is foolish. Why, if you are going to give collateral security to these buggers, as well take that security, go to a bank, rightly take the loan and come here. Why you want to give to these guys, all these fellows? No, don't take deposits. Go directly for, or go for debenture. That is easier. Secured debentures. At least give it to 10 or 15 QIBs or asset management companies. Debt, issue corporate debt. Be happy, service it. Maximum you will have 15 or 20, 150 people will be there. Pay the interest, be happy. You don't have to deal with all these Aam Aadmis. There's no need. Okay. So 73, and so you have to comply with it. If a company fails to or defaults in repayment of deposits, etc., it cannot declare dividend so long as the failure continues. Are we clear? Because they might ask you a question on dividend, and somewhere in the corner they will say company has defaulted on repayment deposit, in which case dividend cannot be declared. Obviously, now on the one hand, this fellow's deposit is pending and you want to take dividend. No, pay him first and then you take your dividend. Section 8 company is prohibited from paying dividend to members. That is the condition for registering a Section 8 company. Section 8 company by its memorandum says, article says, the company shall not declare any dividend, because the idea of the Section 8 company is to promote some social welfare, cultural, sports, etc. So the money, the profits will be applied only in promoting the objects. It cannot be used for declaring any dividend. Now we go on to another very interesting and possibly important topic, which is unpaid dividend account. Unpaid or unclaimed. See, unpaid means the company doesn't pay. It declares and does not pay. Unclaimed means the company has taken efforts to pay, but the shareholder is not locatable. Are you able to understand? I'll give a simple example from a recent one of my clients, MD of that company, CEO of the company, it's a foreign multinational company, but he's a CEO, very nice gentleman. His father was the owner of shares in MRF Limited. That's how I know about MRF dividend and all. MRF Limited, MRF, Madras Rubber Factory, MRF Limited, tire company, very good company. Once upon a time, when he had some surplus money, this poor man has invested in that company, some 5 shares, something that has kept on getting bonus. Now he is having 35 shares of MRF Limited. Now you will say, sir, what is 35 shares, sir? Don't waste my time for 35 shares. Boss, not 35 share means you know how much? For MRF, maybe you can check up the, let us see. Let me see what is the MRF current today's value. MRF Limited. MRF Limited. Share price. 1,02,250 rupees. Boss, when it was going at 63, I didn't buy it. Now it is, can you imagine? One share of MRF Limited is worth 1,02,250 rupees. Boss, 35, huh? Are you going to understand what I'm saying? 35 lakhs. So one share is 1 lakh, no? 35 lakhs. So, but then that is not the story. The story is not about that. The story is this gentleman has purchased these shares, physical form, those days, kept it safely in the locker and forgotten. Then he went on with his life, got retired and came out. His son also became older. He also retired. Now these shares are there. Physical form. Dividend has been accumulated over so many years. And our man has not dematerialized it. Our man has not opened DP account. Our man has not given bank details. Nothing. What will MRF do? MRF tried to make the payment to him, no bank details. So, dividend unclaimed. So, every year, every quarter, they will give money. Every quarter, this money will not. So, like this gentleman, there will be a lot of people who are not claiming, who are not doing necessary. So, the physical certificates are there. What happens? That dividend will be called unclaimed dividend or unpaid, whatever it is, whether unpaid or unclaimed, dividend not paid or claimed within 30 days from declaration. So your duty, dividend once declared should be paid within 30 days from declaration. If the dividend is not paid, then on the from 30, on the end of 30 days, you have to start counting 7 days. 30th day midnight, you have a chance. Then otherwise from the next day, 7. 1, 2, 3, 4, 5, 6, 7. 1, 2, 3, 4, 5, 6, 7. 7 days. 7 days. Within that 7th day, you have to deposit the unpaid or unclaimed dividend amount in a scheduled bank called, that account should be called XYZ Limited. XYZ Limited unpaid dividend account. Whatever. Now, if not done, then in case you don't transfer it within 7 days, then you have to pay interest at 12% per annum from the date of default. Meaning what? 30th day you should have paid, or 7 days grace period given. You are unable to locate that bugger, no problem. Transfer it to unpaid dividend. If you don't do it, then from the date of default, that is 30th day is the date of default. 31st day onwards, you have to pay interest at 12%. Okay. You have to transfer it within 7 days. After transferring it within 90 days from the date of declaration, 90 days from the date of declaration, you have to prepare a statement giving the name, last known address, and the amount of unpaid dividend. And you have to put it up in the website of the company or put on a website approved by government for this purpose. The IEPF has a website where you have to put it up. The idea is any person can go there and see that amount is due to him. He can claim. Okay, but the problem is, in my case, my client told me when we were having lunch together, when he knows that I was a secretary of TIA, I'm an investor activist, and I'm advising people and all that. So he said, this is how it is, sir. My father, who is now 90 years old, 89 years old, has shares in MRF. What to do? So I said, show me the papers. I saw physical certificate even physical certificate is not there. So many years. Some flood or something came, that also gone. But luckily, he had 5 allotment letter, and he had some letters received from the company with the folio number. God save. So luckily, I know somebody in MRF, so I went there and I gave the folio number. They located the share and they said, Mr. Srikanth, this gentleman for the last 30 years, he has not communicated with us. Every year we are giving him dividend. Every year it is going into the unpaid dividend account. Then we are sending the details to the IEPF, everything. Then at the expiry of 7 years from the transfer date of, within 7 days you have to transfer now. At the end of before the 7th day you have to transfer. From that day, you wait for 7 years. From the date of transfer to the unpaid dividend account, 7 years. You have to, once 7 years is over, that money should be transferred together with interest. If in case there is any interest paid on that account, together with interest, the amount of unpaid unclaimed dividend plus interest should be transferred to the Investor Education and Protection Fund. This is what they said, sir. We have transferred all of this to IEPF. They gave me full details, date of transfer to IEPF, everything. This gentleman has to go to IEPF. He can claim, absolutely no problem. I will tell you, the story has a good ending. Don't worry. The story has a good ending. Yeah. Could be the costliest share. I don't know. Maybe Tata Sons may be costlier than this. Maybe. I don't know. Could be the costliest share. Okay. Could be. I'm not aware of it, but this is very costly. See, boss, you won't believe. It was 13,000 rupees, 13,000 rupees. I could have bought it at that time. I didn't buy. 23,000, no. 63,000. When all this gentleman came now, when my client came to me, the price was 63,000. The delay has actually helped him. Today he is sitting on Arun Ojas. You have put one, sir. What, sir? What do you want me to do, sir? Ojaji, what do you want me to do? Arunji, what do you want me to do? In fact, that's a very nice name from Mr. Oja. Oja, I used to know one Mr. Oja, but he was from Rajasthan. So I used to know him. Very brilliant man. He used to run a tax, reporter magazine, Mr. Oja. Okay. So Ojas are all very highly intelligent people according to me. So what do you want, Arun? Tell me. I will answer your question. I'm eagerly waiting to answer your question. But you are from central region. So whereas this gentleman whom I know was from the western region. Sir, unclaimed dividend can claim by any successor of that. Yes. Everything you can do. Don't worry. I will give the story of my client. With that, you will understand. Okay. With the story, you will understand. Okay. But like any story, Arun, you have to wait. If you are watching movie for 2.5 hours, you have to wait. Even when the story titles are going, you shouldn't ask the ending of that story. So here is the case where the client came to me, showed me the physical certificate. I went to the company. Company said, sir, this is possible. This gentleman is a member. No doubt about it. He is a member. Okay. He is a member. And, but unfortunately, what are the problems here? From your knowledge of company law, you will now understand. What are the, first of all, share capital and debenture. First thing, these shares are not being dematerialized. So first of all, even if the company acknowledges it, he cannot sell the share unless it is dematerialized. So first step, we have made him open a DP account. That gentleman opened a DP account and the DP details were to be obtained. First step, DP account. Then DP account is ready. Then we went to the company and give us details, dividend, etc. Then we went to the IEPF, the Investor Education Protection Fund. There is a form. You have to fill up that form and upload it online. In that form, you have to mention clearly what is your folio number, when this was transferred, how much is pending, etc., etc. Then you have to give your proof of, what shall I say, thing. You have to submit an affidavit to the company along with an indemnity bond, along with the proof of your identity, and then the company will inform the IEPF. The company will inform the IEPF, wherein the IEPF they will tell, this is a genuine case, kindly retransfer. So in this case, what has happened now? In addition to dividend, the shares themselves have been transferred because so long it has not been claimed. So the shares themselves have been transferred. So we made an application, we followed up with the IEPF, and then finally the IEPF agreed, you are the owner. And then the DP account details we gave now, to that DP account, they credited the shares. This took about 2.5-3 years of follow-up. Finally, we got it. With the dividend, all the old dividend credited back to his account, that designated account. The shares are also dematerialized and given. So today, this gentleman is 92 years old. He is the owner of 35 shares in MRF Limited. 35 or whatever shares in MRF Limited. Okay. So of course he can do. Now the question asked by Arun Ojaji is successor. Now, please, my dear friend, let him live for 100 years. Let us pray. Jeevemas Aradashadam. Let him live for 100 years. So first let us make that prayer. Then we will mention what I am going to tell. Some other person, not this gentleman, some other person, like this same situation, died. Now the successors, can they do? Yes, they can. But the problem is multiple now. Earlier, there was only one problem. The shareholder was alive and he made the application. Now, there should be an application by the successor. The successor will now first have to get the shares dematerialized. Then it has to be transmitted in his name. So that procedure also has to be done. Then, once the transmission has happened, then the company will inform the IEPF that so-and-so was the owner. Now this gentleman is a successor. We have examined legal heir proof and all. He has given us. Please transfer it to this account. Very, very difficult, but can be done. But very, very difficult. Are you able to understand what I'm saying? Because you are two things. Earlier, that gentleman only had to prove his identity and say that I am. And it was agreed and done. Now that man is not there. You are claiming you are the legal heir or successor or whatever. Then you have to prove that you are the only legal heir. If there is a will, there should be this share should have been, if they are in the part of a will, then you should get a succession certificate. All sorts of documents you should have. If you have all that, yes, it can be done. Okay. See, because I'm I'm my not specialization. My favorite topic is company law, so I keep giving. So many people come to me, and also I was an investor. I'm an investor activist. I keep talking in various forums and all. So they keep telling me that please help me. I'll go and help them. So just out of love and affection, I will do it. Suddenly, Vishwanath Reddy Garu is taking me out of topic. Out of topic, yeah. Hindenburg report and all, I'm not aware, seriously. At that time there was a controversy and all that. What is my opinion? My opinion is Adani itself is a dangerous company. Don't touch Adani. That is my view. Whether Hindenburg gives a report or not, Adani is a dangerous company. Don't touch it. Whatever you may have high opinion about Adani and all, my view is that my portfolio, Adani won't be there, but Ambani will be there. If you ask me, Ambani and Adani, the difference is Ambani runs a profitable business. Adani is running a business that is based on political support. If political support is not there, Adani bush. But even if political support is not there, Ambani will survive. And he will ensure that he is working. So this is my opinion. You ask me my opinion, I'm giving you. So yes, according to me, Adani has got a lot of political support. And that is why he is able to do all these things. So such a man will always be in trouble at some point in time or the other. It's a matter of time. Today you can say tomorrow. Today, in fact, that day when I was talking to somebody, I think I mentioned it. I was in one alumni meet. I'm an alumni of the Birla Institute of Technology and Science. I've done my MS in management systems from the Birla Institute of Technology and Science, Pilani. So BITS Pilani. So we have an alumni in Chennai where I went. So an engineer fellow, he is giving lecture on stock market, and he's telling this, that, blah, blah, blah. Right. Your engineers only qualified, chartered accountants cannot talk. So not only that, that fellow is telling Adani is a good company. It's being unnecessarily beaten down by Hindenburg. Now is the time to buy and all foolishly he was telling. Maybe yes, Hindenburg also had a hidden agenda. What was that? He wanted to short it. If so, that is his problem. Soros did it so many times. George Soros did it so many times. Hindenburg is doing it. If so, then action can be taken against Hindenburg, whatever. So what I'm saying, it's the whole controversy. My view is Adani is shit. Don't go to that share. Don't touch that share. Whenever I give a warning on a share, I've always been ignored by people. Whenever I give a warning on a share, for example, 7 years ago, I said, don't touch S Bank. I told people, don't touch S Bank. S Bank is shit. They didn't believe me because again, the management was fraud. The management was unscrupulous, unethical management at that time, and it was discovered subsequently. But even at the time of public issue, I said, don't touch S Bank. It kept on going up, People said, Srikanth, you're a fool, you would not bought it. Chalo, yaar. Now you sell it and make your money and get out. No. To go up, it will go up. Finally, what happened? Because it's useless bank, I'm telling you. I don't know about it now. Maybe revival. At that time, it was useless. Low capitalization, unscrupulous management. So why I'm saying now, when I put my finger on a share and say, don't touch it, people keep buying it. Suddenly, when it collapses, then they will say, you told at that time, you told. I'm telling now on Adani, don't touch Adani. Whatever may be the market information, blah, blah, what you got, no need. It's not worth. There are better shares in the market here. Even at 1,02,000, MRF may be a good pay. For all you know, another 3 years it will go to 1,50,000 steadily. Because the market, it's got a huge market share, chunk. It's sitting on, and that 1 lakh is because of its immobile assets. It's got huge plantations, whatever. I don't know about literate. I don't know whether I'm literate advice. My advice is a common sense advice. Based on common sense, I give this information. Anyway, I gave the story of my client only to help you understand the mechanics of how unpaid dividend works. From a real life case I gave you. So finally, 7 years kabad, it will go to IEPF, IPEF, Investor Protection and Education Fund. I don't know if it is IEPF or IPEF. I think it's IEPF, Investor Education and Protection Fund. You can do neither. I have done it for 3 years as Secretary of TIA. For 3 years as Secretary of the Tamil Nadu Investor Association, I have tried to educate the investor. They don't want to be educated. The government is trying to protect them. If you give protection, they will break the protection and run. If you say, be careful, that is dangerous, they will break the protection and they will run. And then when things go wrong and they get into trouble, they will blame the government. They will blame the chartered accountants. They will say chartered accountants are the problem. They are the people who are creating nonsense. They will talk. That is the problem. Investor cannot be educated, cannot be protected in India. Okay, this is my humble view, and I'm talking with after a lot of experience, bad experience, not bad. See, even though I go and talk, address the investor association and all, they will listen to me. Finally, after everything's over, they'll say, Mr. Srikanth, can you give any tips? Which share to buy like that? Baba, I'm telling you, don't do like that. Don't based on tips, don't invest. Do your own research now. No, Mr. Srikanth. Don't waste time. You tell me which share to buy tomorrow, please. That's why I come. Like that foolishly, they will tell. Thank you, madam, for clarifying that it is IEPF. Good job. Now, Acme Engineering Limited has declared a dividend of 10% at its AGM held on 27 September. Referring to the provisions of the General Clauses Act 1897, you are going to study General Clauses Act. Maybe I will be teaching you. I don't know whether I will be teaching. Somebody will teach you. General Clause Act is in your syllabus. This is a combined question on dividend and general clauses. So, General Clauses Act has provisions on how to calculate dates. Okay. So, this company has declared a dividend at 10% at its AGM on 27th September. So, you should have double knowledge. You should know that the dividend should be paid on or before the 30th day. How to count to 30? So, the date on or before which the Acme Engineering Limited is required to pay the dividend. The date on or before which the Acme Engineering Limited is required to transfer the unpaid or unclaimed dividend. 2 days. One is 30 days, the other is 7 days. Now, Section 9 of the General Clauses Act deals with computation of time. This section states that in any legislation or regulation, it shall be any General Clauses Act applies to all the laws made in India. It applies to all laws. Any law, if this rule will apply. So it applies to all laws. It has applicability across India. So in any law, okay, any legislation means law, or regulation means rule. It shall be sufficient for the purpose of excluding the first in a series of days. We already saw this when we did the transfer and transmission of shares. Do you remember? So you have to exclude the first in a series of days or any other period of time. To use the word from. So when you say from, then you exclude the first. And for the purpose of including the last in a series of days or any other period of time, to use the word to. So when it says from to, then the first day should be excluded and the last should be included. This means date of declaration of dividend shall be excluded. So that's why, in fact, when I told you 30 days, what did I tell you? Till midnight, that date of dividend, you have to wait. Then the next day onwards, you count 30 days. Do you remember? At the time I told you, that is based on Section 9 of the General Clauses Act. So this company declared the dividend on 27th September. So, chhod dijiye. 27th, leave it. Then count 30 days. September has 30 days. So 28, 29, 30. 3 days in September. Then another 27 days in October. So 27th day, 30 days. So 27th of October. Are you able to understand? 27th. So you have to count. So 27th is not there now. Then 28, 29, 30. 3 days in September. Then balance 30 days. So 30 minus 3, 27. So 27 days in October. So 27th of October would be the correct answer. Okay. So 2710 will be included. Therefore, it should pay the dividend on 2710. Then from that you count. You ignore 27. 27 you take off. You count from 28. 28, 29, 30. October mein 31 hai. 31. 1, 2, 3. Okay, third. You count from, accordingly, 7 days you count from 28th. Third. Am I correct? There is 28, 29, 30, 31. 2810, sorry. See, on 2710, 30 days will get over. Correct? On 2710, Acme Engineering will be required to pay dividend on any day on or before 27/10, commencing from 28/9/2020, both days inclusive. For counting, yeah, that is correct. For counting 7 days, then you have to start again from the 28th of October. So 28, 29, 30, 31, 1, 2, 3. 3rd November will be the 7th day. You have to take it. Okay. So this is a combined reading of your General Clauses Act as well as your dividend provisions. So here two types of knowledge are. So in fact, if I'm going to classify this topic wise, scanner will be in trouble, because will he include it under dividend or will he include it under General Clauses Act? Intelligently, what I will do when I'm analyzing, I will say both. When you are studying General Clauses Act also, but in my humble view, this is more of a dividend topic than a General Clauses Act, because General Clauses Act is applicable to all laws, whereas this is dividend specifically. So I'm including it in dividend and teaching. But section, it's also a problem where you have to apply section 9. That is why they say referring to the provisions of General Clauses Act, because they're giving a hint. Be careful, General Clauses Act. Okay. I'll tell you, one of the best things that ever happened to our syllabus was General Clauses Act, because there are many rules there that will be very useful to you when you become a member, practicing member or service member. General rules. People ask you where it is, you will tell them, boss, it is in General Clauses Act. So the respect that you command will grow higher. So remember, being knowledgeable is one thing. Possessing knowledge, demonstrating the possession of knowledge. This is what gives professional reputation. When a man is seen as knowledgeable, how he will know? How you will know that who is knowledgeable? Only if they express that knowledge. Possessing is one thing. Communicating and articulating it is another. Therefore, when you do that, you will be seen as a highly successful, knowledgeable person, and you will be given better and better opportunities and rewards. Correct. Bhumika is now slowly arriving at the answer correctly. Same way, 7 days you have to count from 28th October. 7 days will lead to 3rd November. Beautifully, beautiful. Now, I'm going to stop here because hardly we have another 25 slides. Next class, I will finish. I will explain, madam. No problem. See, first of all, let us understand. You yourself have told me that 30 days will be counted from 28th October. 28th November. So you counted and you have arrived at 28th. You arrived at correctly 28th October. 28th October. Now, 28th October is the 30th day. Am I correct? Sorry. 28th October is the 30th day. No. 27 days of October. Madam, how it will be 28th? Madam, 28, 29, 30. Madam, 27 is the date of declaration. 27 November. Leave it, chhod dijiye. Then what you have? 28, 29, 30. You are given 3 days. Total 30 days. 30 minus 3, how much? 27. So 27th. How it can be 28th? How you arrived at 28th? First, madam, balance 27 days. That will be in October. That will be 27th October. The 30th day will be 27th October. How you got 28th October, madam? Now. What does the rule say? Whenever you are counting from 2, leave the first date. So you have to count from the 30th day to 7 days. So you should not include the 30th day. What is the 30th day? As per my humble view, it is 27th October. So you should ignore it and start from 28th October and count 7 days. So 28th October means 28 means 28, 29, 30, 31, 1, 2, 3, 3rd November. That is how we get. Okay. Did I speak Kannada? I don't know. I can't speak Kannada. Okay. So, Bhumika ji, have you got the point? 28th October that you are given is wrong. It should be 27th October. You asked any question, madam? I'm not seeing now. What is your question? Bhagyasri ji, what is your question? You have written, sir, you are speaking Kannada. What do you mean? Are you asking me if I can speak Kannada? No, I'm not a Kannadiga. If that is the question, I have answered. So what is your question? Are you asking if I am speaking Kannada? No, I'm speaking English, but I can speak English in 5 languages. I can speak English in 5 languages. Tamil, Malayalam, Kannada, Telugu, Punjabi. I can speak English in 5 languages. Means the English accent I can speak in 5 language accents. Okay. So person will think that I'm speaking that language, but actually I'm speaking English only. Anyway, no problem. Good show. We had a great evening, I hope, and we have learned something. Now we will move on to the next class. I will, inshallah, complete this topic, and I will also take up some assignment questions, which Kavita Lamsal was asking the other day. I will answer that. If you have any other questions, you can ask me. Otherwise, we can close the session. Have a great evening ahead. Enjoy yourself.